Good evening, everyone. Welcome back to the channel, where we break down the most important financial stories you need to know. Today, the markets faced a seismic shakeup, and it's all thanks to a Chinese AI startup named DeepSeek. This game-changing innovation sent shockwaves through Wall Street, sparking fears of an AI bubble burst. Let's dive into how the major indices performed and what this means for the future of AI investments. Let's start with the numbers. The Nasdaq Composite took the biggest hit, plunging 3.5% as tech stocks were hammered across the board. The S&P 500 wasn't far behind, sliding 1.8%, marking one of the worst days for the index this year. But not all hope is lost. The Dow Jones Industrial Average managed to close in the green, rising 0.5%, thanks to gains in defensive stocks like Apple, Johnson & Johnson, and Travelers. This stark divergence shows a significant rotation out of high-growth tech sectors and into safer, defensive industries amidst today's market turmoil. So, what's causing this upheaval? Last week, DeepSeek, a Chinese AI startup, unveiled its first AI model, R1, which is reportedly more efficient than anything Silicon Valley has produced. Here's the kicker: it only cost them $6 million to develop. Compare that to the billions companies like Nvidia and OpenAI are spending, and you can see why investors are panicking. According to expert John Belton, DeepSeek's model is a game-changer. It challenges the high-cost business model of Silicon Valley, proving that advanced AI systems can be built with much less investment. This raises big questions about the future profitability of companies relying on these expensive systems. And that's exactly why we saw stocks like Nvidia, Broadcom, and AMD take such a beating today. Nvidia, the crown jewel of the AI revolution, saw its worst day since 2020, plunging 18%. Other semiconductor giants like AMD and Broadcom also faced heavy losses, falling 7% and 17%, respectively. It's clear that DeepSeek has rattled the market's confidence in these AI-heavy companies, and investors are asking themselves if the AI bubble is starting to burst. According to analyst Sam Stovall, it's a good example of investors selling first and asking questions later. Valuations in tech, especially in semiconductors, have been stretched, and this event acted as a catalyst for today's sell-off. Interestingly, while tech stocks were bleeding, defensive sectors came to the rescue. The healthcare and consumer staples industry saw gains, with Apple, Johnson & Johnson, and Travelers all performing well. This rotation signals that investors are not abandoning the market altogether, they're simply seeking safer bets in a volatile environment. Looking ahead, the market isn't out of the woods just yet. This week is packed with earnings reports from tech giants like Meta, Tesla, and Apple. Additionally, the Federal Reserve is set to hold its first policy meeting of the year. While the Fed is widely expected to keep interest rates steady this week, analysts predict 2 rate cuts later in the year, which could provide some relief for the markets. According to economist Lisa Kailai-Han, the Fed's decisions this year will shape market sentiment, especially in the face of rising volatility. Investors should brace for more turbulence in the coming weeks. To recap, the markets were shaken by the emergence of DeepSeek, a Chinese AI startup that has challenged the high-cost models of Silicon Valley. The Nasdaq tumbled 3.5%, the S&P 500 dropped 1.8%, but the Dow Jones held firm, rising 0.5% thanks to defensive stock gains. The big question now is whether this marks the start of a broader AI bubble burst or if this is just a momentary shakeup. Only time will tell. Thanks for watching, and don't forget to like, subscribe, and hit the bell icon to stay updated on the latest market trends. Until next time, stay informed and invest wisely.